Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, August 1st, 2024. So today was a bizarre day. It caught me by surprise, but it worked out fantastic. And let me explain why. So we had the gap up today. And then from there, what happened was we got right into the resistance zone. If you remember, this is what I was putting down as the resistance zone, anywhere between the 55.30 up to the 55.62. And if they got above it, then they were coming up to the 55.80. So the trigger line that we were looking for, really to say the volatility trigger, was if the bulls got it over to 55.15, which they closed there. So I was leaning to the upside, but we made it to this resistance, and I'm going to switch over to our algorithm, or AI that we use, and if we just go to the lowest thing, here you can see we made it up here. We then started coming down. We saw a volume sell, and then we saw the trend indicator. So I closed we had a straddle going into today, and I closed the calls just because I didn't really want to play any games with it, and I just let the puts run. And I really didn't expect this to happen. We made it to the support area where it was the 544 was a. Let me just pull that up real quick so make sure I'm saying it right here. Okay, so we put our fibs in. Yes, here you can see five anywhere from this 544 level. This was your support, and I just said, I said where we have the 550 puts, we got it down. It was at the 544. I took profits. Obviously, could have made a lot more because it went down another 6 points. But we did pretty good on the trade. I have some of these blocked out because this is the personal account. But here you can see, we bought this yesterday at 12.35 or 12.14. The strangle, the August 551, 550 call puts, paid $5.78 for it. So this here, just cross this out because I had some personal short positions on the SPY, and when I put in this straddle here, it added to what I have. So this is for 60 puts on it, but you can see here, this is what we sold. We only had 10, so we sold the calls for $3.85, so $3,800. So remember, this was the cost of it, and then we turned around and we sold the puts for $5,300. So on that, we made about $3,000 on that. It could have been, up to $10,000, honestly. And this is what a $5,780 investment. This was what we put in for this. And, like I said, we ended up making it close to $38.50. So, yeah, $9,000. We made about $4,000 on it. So it worked out, pretty good for us. But like I said, I wasn't really expecting it. And if we, like I said, if we were able to sit there and hold it the entire time, these would have been a lot more. So the point is this, is that the AI gave us this signal right here, and I just followed it with the getting out of our long position here, and then we just stayed underneath the trend line the entire time. And then once we got back up here, so yeah, I could have sold it at that 54 when we got down to this 54. I think it was right around that 54.30, somewhere in this range here. But I didn't, because I was just waiting for the bounce and just to switch, and I really should have just let this keep going on it. But in any case, here you got your buy signal. So we actually put on another straddle right here because we have the Apple and Amazon both reported. Apple was getting hit pretty good, I believe. I'm not sure which one. One of them was. So that means that the futures are going to probably open up down. But on top of that, we then have non-farm payrolls. So the odds of the spiders trading back up to the 548, 550 area, 550 is not out of the question here. And what also is not is, let's say that the non-farm payrolls disappoint, then really what we would be looking at on this is hang on one second, let me just do this. I'm going to switch this over so we can see where the next this is just 20 days, 360. Okay, so what's going to happen is if we take out these lows here, then we're coming down to the 50, really probably all the way down to the 53.30 area. So we have there's a lot of room on here, and again, this is going to be your volatility trigger if if the 537 gets taken out. And then we're probably going to be coming down to this to the 530 level, which is the target that has a lot of options activity. But you can see there's points to be made on both sides of it. We just need to see, with Amazon and Apple both. Let's say, bringing markets down a little bit. If non-farm payroll disappoints the street, like I said, we can see another 78-point move to the downside, and we're going to make some decent profits on it. And again, it's not a massive investment that's in here. For 10 contracts, I'm putting in, they're like $6,000. The way that it doesn't make any money is if the street ignores Amazon, Apple, and the non-farm payrolls tomorrow and goes flat. I think it's a risk that's worth taking, and if not, then it stays flat. We'll just get out of it, and we'll take a little bit of a hit. But I kind of like it. So let's go back to our one other thing on this. So the thing is with the I don't know why these things aren't going down. But anyway, on the 60-minute chart here, what we're looking at, we had just had two sell signals here. On the 15-minute chart, we had sell signals. We were below. I don't know what's going on. Hang on one second. So I don't know why these aren't. Okay, there we go. So here you can see we had a 3-prong sell system. So here you can see we had a volume trigger. We got below the trend here, and then from there we had the Arun crossover. So this is where momentum really started picking up. We made it to the support area, and then from there we got the bounce. So it's still on a sell with the 15-minute chart on. Really, we don't really have a sell from the volume, but we're still below the trend, and we're still on a sell on the Arun. We do have some bullish divergences. So let's go to our S&P charts, and remember, this is what I've been showing you guys. This was the resistance, this was the support. We made it up there. We didn't really have any bearish divergences, but like I said, I let the AI get me out of that trade, and it worked out, pretty well for us. And this is the way I'm really going to be making these trades, even for the prop trading company that I'm going to be doing with. I'm taking the thinking out of it. I'm going to let them, do the trading for me. And you want to also use your own technical analysis with this, because when you're here, and we're on that's the 5. Okay, hang on one second. I don't know what's going on here. SPX, let's go to 15. Okay, so on the S&P here, on just a 15-minute chart, you can see we had massive divergences. We had the RSI that was at extremes, and then we are at resistance. So this is why I took these off up here. This was not a sell signal until we came here on the with the spiders, and then that triggered everything in. So right now, the bulls are going to have to get above this 5,500. Let's just leave it at that. That is the number. If they do, then they open the door to test the 5,530 level. The bears, they're going to have their work cut out, because first they got to get through here, but then they have this support zone right here coming from the 5,400 down to the 5,370 area. So if they break through that, that's where I'm, on the side that we're going to see a volatility trigger. And honestly, we're probably going to be trading somewhere down into the 5,300, which if I just kind of take this and take a look at it. So here you can see 53.32. We have an open gap right here, 52.85, and it's also part of the extension. So if we head down, don't be surprised to see us getting close to that, down to the 53.50 or anything like that. If we head up, don't fight it. Just, if the non-farm payrolls come out and they're able to ignore the earnings, then that's fine. So that's really about all I have. Like I said, the resistance zones are still there. Volatility trigger on the downside is going to be if we break through these lows here. And if that happens, then really I'm anticipating to see the S&P drop all the, there's some support right here at the 53.25. But like I said, 5,300 round numbers they kind of like. One thing I will say is I'm not really sure how many people are going to want to hold over the weekend, and it's more for geopolitical reasons. There's, you have everything going on with, Iran and Israel, and then Russia and Ukraine, that things are starting to bubble, and, people would rather just go move to cash and let things play out before. So there's a chance. I'm not saying it's going to happen. We'll wait and see how the market's open, but there's a chance we can see another 100-point move to the downside. But if if nothing comes out and the non-farm payrolls, they like it, then I wouldn't be surprised to see us trading anywhere back up into this, the 5,500 level. So big moves coming in both directions. That's all we need with our straddles. And with that, have a great night, and I'll talk to you guys in the morning.